operational and financial performance for Royal Orchid Hotels Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Agarwal from Nuvama. Thank you, and over to you, Mr. Agarwal.
Thank you, operator. On behalf of Nuvama Wealth, I would like to welcome you all to the fourth quarter FY23 earnings call of Royal Orchid Hotels Limited. The management today is represented by Mr. Chandar K. Balji, Chairman and Managing Director, and Mr. Amit Jaiswal, Chief Finance Officer. I would like now to hand the floor over to the management for the opening remarks, followed by the Q&A. Over to you, sir.
Yeah. I'm Chandra Balji. Good evening and warm welcome to everyone. Thank you for joining us for this Royal Orchid Hotels Limited earnings conference call for the fourth quarter and financial year 22-23. Please note that Q4 and financial year 22-23 results, press release and investor presentation are available on the exchange. I hope you have had the opportunity to browse through the highlights of the performance. In the current financial year, the industry bounced back very strongly after COVID. From April 22 onwards, we have done robust business, which were evident in the financial results of all the 4 quarters of this year. We continued the success story in the fourth quarter also. In fact, we have built on the success and did phenomenal business in the fourth quarter. The same is evident in the fourth quarter results. The company has posted a robust growth because of a strong business model and effective risk mitigation strategy. We are aiming to post better margins than what our company has witnessed in the recent past. The fourth quarter as well as the year-end result of 22-23 has been one of the best in the last 10 years. Financial highlights of the company for the fourth quarter on a consolidated basis are as follows. Consolidated revenue from operation for Q4 was 72.55 crores as compared to 39.53 crores the year before that, a growth of 84%. This was attributed to increase in ARR and occupancy and also increase in F&B business. Consolidated EBITDA for Q4 was 25.8 crores as compared to 14.24 crores in the previous year, an increase of 81%. Consolidated PAT before exceptional items for Q4 stood at 12.98 crores as compared to 5 crores the previous year, an increase of 159%. Financial highlights for the company for the 12 months ended 31st March on a consolidated basis are as follows. Consolidated revenue from operations was 263 crores as compared to 138 crores previous year, a growth of 90%. This is attributed to increase in ARR and occupancy and also increase in F&B business. Consolidated EBITDA was 98.3 crores as compared to 40 crores in the previous year, an increase of 143%. Consolidated PAT before exceptional items stood at 49.98 crores as compared to a profit of 26.88 crores previous year, an increase of 86%. During the quarter, we've been able to increase the average room rate for Q4. It stood at 5,657 as compared to 4,035 in the previous year, a growth of 40%. We are well in line with our vision to operate 100 hotels before the end of the calendar year to 2023, and we are looking forward to opening new hotels in different cities in India. As we talk, we are operating 90 hotels. During the quarter, we witnessed a RevPAR growth led by higher ARR. We believe the industry has seen a revival, and we have bounced back with a better result in the current financial year. Management has set out a strategy to diversify the product offering, provide unique customer experience, and work towards a robust balance sheet. I would like to conclude my opening remarks by saying that we are witnessing major signs of growth for our industry as a whole, and which will show up in our overall earnings and quality over the next several quarters. Thank you. And now we can go the floor open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may press star and one to ask a question. Our first question is from the line of Rahul Pangadia from Lucky Investment Managers. Please go ahead.
Congrats on a great set of numbers, sir. And if you could just give us a sense, how is the growth plan on the managed in terms of managed keys in terms of number of rooms and all shaping up for the next one to 2 years? What are we looking at in terms of overall numbers?
See, we are looking at today. We are sitting at about totally all hotels combined. We are looking at 90 hotels. All right. Now, we have got in the pipeline about 24 hotels. And I think by September, we should definitely cross 100 hotels. And looking forward, the way business has grown in the last 1 year or so, the number of hotel openings which are happening, I think we should be able to cross the next half year another at least 40 to 50 hotels. That means we're looking at almost reaching about 140 to 150 hotels by the end of this financial year.
So 140 to 150 hotels by the end of FY24, we are talking about, sir?
Yes.
Sir, could I ask you to please come near to the speakerphone?
Yes.
Not audible, sir. Thank you.
Yeah, can you hear me now?
Yes.
Yes, sir. Loud and clear, sir. Loud and clear.
Okay.
Okay, so we are talking 140 to 150 hotels. That would be what? Roughly, we are talking 8 to 9,000 rooms. We are at roughly about 5,400 rooms as on date. So what are we talking in terms of number of rooms?
See, by September, which I can give you as a definite kind of a figure, we'll be able to add about almost 1,000 rooms, so about 6,500. And
okay.
I think another 6 to 8 months after that, we should be able to add another, you're right, about another 1,500 to 1,000 to 1,500 rooms, yeah.
Okay. So we are looking at, let's say, 7,500 to 8,000 rooms by the end of FY24.
Yes. Yeah, we should be able to do that.
Okay. Sir, the second one is actually not a question, but just a request which I made in the last call as well. Our presentation doesn't give any bifurcation of what has been our earnings through our asset-light model and our ownership model. It's left to the investors to kind of keep either speculating or ask you on the call repeatedly as to what have you earned from the respective segments. And the other thing is that, while we do give occupancy numbers for the various segments, I think it might just add a little more value to the investors if you could just give us a occupancy numbers for the properties which are probably, let's say, 1 year old or 2 year old, and the properties which have been recently added, which gives a sense to everybody as to how has the occupancy progressed for mature properties and the not so mature properties which have got linked to your network. So that was just a feedback and a suggestion, sir. Thank you very much for listening.
If you see our slide number 35 in the presentation, we have classified our revenue into owned, leased, joint venture and managed hotel. We have bifurcated this time in the presentation. So from managed hotel, what we have earned, we have given, and also we are also giving the EBITDA what we are getting from managed hotel and owned hotel, leased hotel and JVs.
Let me just confirm this. Which slide number are you talking about here?
Slide. If you see the slide number, 35. There we have given the earning, bifurcation.
35. Okay, I'll have a look, sir. I'll have a look. Maybe I missed this one. Sorry about that. Thank you very much for hearing this out, sir. Thank you.
Thanks.
Thank you. Before we take our next question, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hello, thank you so much. Good evening, sir, and thank you so much for taking my call, sir. So apologies, I just joined the call a bit late in case of a repetitive question. What I just wanted to ask, what kind of revenue growth and margin growth are we expecting in the next 1 or 2 years? Because we've been expanding our number of hotels. So, what kind of ballpark range that, we could have?
See, as far as the revenue growth is concerned, this year we have almost touched 300 crores. Okay, because one of our associate revenues do not get reflected in the consolidated financial. If you add that, so we have almost touched 300 crores. So our targeted revenue for this current financial year will be 400 crores and an EBITDA of 120 crores. That is what the target is, and it looks like achievable.
So, sir, this 400 crores would include the revenue from the associated company?
Yes. It will obviously.
So sorry, sir.
Around 28 crores of revenue of associate has not been consolidated. So.
Okay, perfect. Yeah, thank you so much for that answer my question. Thank you so much. All the best, sir.
Thank you. Our next question is from the line of Navneet Bhaya, who is an individual investor. Please go ahead.
Hi, sir. This is in addition to one of the previous questions. So you're looking to add about 3,000 keys in FY24 from 5,000 to 8,000. So the question is, sir, are these mostly greenfield projects, or are these more in tie-ups with hotels which are maybe unorganized right now, in the unorganized segment right now?
It'll be a combination of both. First of all, let me correct you, they're not 3,000 rooms being added. Right? We'll be adding, as I mentioned to you, about 1,500 to 2,000 rooms. And we are looking at adding, this last year we have added almost 40 hotels. So this year also a similar number will get added. So that's what I said, that we are today sitting at 90. And so we may be able to add about at least 40 hotels in this year. So our target is, we can't tell you exactly how much is, because that depends on opportunities which come our way. But there will be a combination of either some conversions, hotels which are already there, we convert it, that's the fastest way to do it. And then some projects will be brownfield, where the structure is already up, interior is going on. So those are hotels which will come up within this year. If any greenfield project is there, which we are also signing, that will take at least 2 years to come up.
Right.
Just to sum up on Mr. Balji, let me tell you, see, around 24 hotels are already there in the pipeline which are signed, and that will add another 1,100 rooms. So we'll reach 6,500 rooms very shortly. Then further we are targeting another 1,500 rooms, maybe in another 20-25 hotels. So with that we will touch 7,500 to 8,000 rooms.
Understood, sir. So, of the 40-45% growth that you're targeting in terms of either hotels or rooms, what's the broad bifurcation in terms of conversions of existing hotels versus brownfield or greenfield additions, new capacity?
We can't say right now because development teams are under discussions. Now we are, if we go and talk to somebody, and if it's a greenfield project, we'll sign that also, because we have to keep our pipeline going for the years to come. And whereas if there's a conversion, then they'll sign a conversion. So I can't really tell you which will really get converted, which will not get converted, but I can assure you there are a large number of inquiries coming into our chain today, and we are working towards both conversion or brownfield and some greenfield projects also.
Understood, sir. And sir, even I missed your maybe initial couple of minutes of your commentary. Any outlook that you can re-share if you've already shared on the overall industry in terms of supply? How much supply, fresh supply is coming in the industry? If you can share anything on that.
See, what happens in hotel industry when the demand is good. Now this year the sector has done well. So this year people have woken up, yes, we should set up hotels. And this is a sector which is earlier like a blacklisted sector. People won't touch it. And I remember whenever we used to approach banks, particularly HDFC Bank, they used to say, no, this sector is not in our list at all. And this year they themselves approached us, and we got the loan swapped, and we got very, very good terms from them. So I think sector is little positive, but the supply will start coming in from, say, 2 to 3 years from now. Staff is coming in. So 2 to 3 years time, if everything goes well, the way Indian economy is growing, you can see all parameters, that our business will grow. So demand will outstrip the supply at least in the next 3 years. So we can look forward to a good time in the next 3 years.
If you all go through the last budget, for the first time in the history of India, that the tourism sector has been given so much importance in the budget, and the government is very ango on this. So we are looking forward to that, and the growth in the industry will be robust in next 2-3 years. The demand is growing heavily, but supply, it may take some time for the supplies to come.
Okay, so sir, just to maybe quantify it to an extent, next 2-3 years you see supply addition being less than maybe in the single digits. Am I understanding it correctly?
As far as the newer hotel is concerned.
Yeah, new hotels, of course.
Yes, new hotels, yes. Because, the industry is such that once you plan to open a hotel, it takes 3-4 years to start the operations. You can't start. Even if you plan a hotel today, it will take minimum 4 years for the hotel to get operational.
Understood, sir. Thank you so much, sir, and I'll join back in the queue if I have any further questions. Thank you.
Thank you. Our next question is from the line of Sakshi Chabra from Swan Investment. Before you go ahead, ladies and gentlemen, you may press star and 1 to ask a question. Chabra, you may go ahead.
Yeah. So I had 2 questions. One was I wanted to understand that what is the ARR trajectory going forward for the next 1 or 2 years. And my second question was that on the room addition that you spoke about, what percentage or how many rooms would be on the leased and revenue share model?
We are targeting whatever hotels we set up, about 15% of the hotels we are targeting for revenue share, and balance 80-85% will be on management. Now suppose we are targeting say 40 hotels, then I would say about 5 or 6 hotels should be on revenue share, and balance hotels will be on either franchise or management.
As far as the ARR growth is concerned, we have seen a growth of almost 40% from last year. And further, yes, there are scope because the kind of occupancy is going up. So we are looking forward to another 10-15% growth in the ARR in the current financial year.
Okay. And you think that you can maintain the occupancies, or you think that the occupancies will probably increase going ahead?
So occupancy, I don't think so it is going to increase any further because we are already doing 77% occupancy.
Right.
So I don't see that it is possible.
Sure. Okay. Thank you.
Thank you. Our next question is from the line of Rahul Bangadia from Lucky Investment Managers. Please go ahead.
Sir, just a follow-up question on one of the comments that you made regarding the revenue and the EBITDA numbers that you're expecting for FY24. You said about 400 crores of top line and 120 crores of EBITDA. That seems reasonably lower than the EBITDA margins that you are reporting today. I just wanted to understand, is there some math here that I'm missing?
I'll explain it to you, Rahul. As we said that now we are only growing in the revenue share model. Okay, we are not going to own any asset. So if we increase in revenue share model, what happens is the return, the margins are lesser in revenue share model than the owned hotel. If you see our slide, we have given the margins, what we have done in owned and what in leased. So in leased model, what happens, the margins are around not more than 15% of the growth. So even if the revenue grows, and the maximum this growth in the revenue will come from the leased asset. So the margins will not be that much.
Okay. In that sense. Okay. Yeah, that clarifies it. Thank you very much. Yeah.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Raj Thakkar, individual investor. Please go ahead.
Hello.
Yeah.
Hi, sir. Congratulations on a good set of numbers. So just a few questions from my side. The first one would be, can you share how do the modalities work in a managed properties model, and how does the accounting work in this case as well?
Yeah, so in management business, what happens is we get a percentage of the top line and a percentage of the operating margins, which works out to around 5.5-6% of the total turnover. Whereas in leased asset, in revenue share, what happens, whatever the revenue comes and out of our operating margins, we pay a percentage around varying between 20-25% of the revenue to the hotel owner, and balance we retain. So that's how it works.
Okay. And what's the ROE and ROC that you presently make in managed operator business versus the traditionally owned hotels model? And can we assume that the ROE and ROC will keep improving as the share keeps improving? And also will this...
that is why I have included one slide of ROC in my investors presentation in this time, and in slide number 39. And we have, the ROC has increased. I've given a statistics of last 5 years. It has increased a lot, and it is going to further increase because the additional management fees which we get, almost 80% or 75% of that will flow down to the bottom line of the additional fees what we'll get in the current financial year. So our ROC is going to definitely improve. And as far as the revenue share model is concerned, there, I may be getting a lesser, margins as in comparison to the revenue, but my investments are not that much in that. So the return on the investment will be quite high.
Right. Got it. Okay. And can you throw some light, sir, on the recent SEBI issue that has cropped up and where we are on that right now?
Yeah, so I may not be able to elaborate too much on the issue because the matter is sub judice. However, I would like to update that SEBI had passed an interim order against our company on 31st of March, asking us to reinstate our financial for FY22, treating one of our associate as subsidiary. And they had sent and asked us to, they had issued a so-called notice to Mr. Baji, Keshav Baji and myself. However, we were confident about our stand on the issue as we had taken enough legal opinion as well as we had informed the market about the change in the structure of the subsidiary to associate way back in March 22. So we took legal opinion and we moved SEBI Appellate Tribunal, and on 9th of May, the Appellate Tribunal was pleased to put a stay on the interim order passed by SEBI and also on the functionality of that order. And now SAT has asked SEBI to file their objections, and we will be given time to file our rejoinder, post which the matter will be heard on 30th of June. This is the status of the case.
Okay. Just a few more questions from my side. So the company seems to be opening up several hotels in North India with recent hotel openings in Ambala and Fagwada. So are we focusing on growth in North India aggressively, and which other states are we looking to build up in that region?
See, what we are doing is, since we were a south-based company, we had a very healthy growth in the south. We went to West, we went to Rajasthan, and now we are going aggressively in the North India. But this year we are also concentrating on East. So we have appointed a vice president in the East in Calcutta. So he's looking at that. We have appointed one vice president in international operations. So he's going to scout around for properties internationally. So we are planning to grow in the entire country now. Okay, and wherever our weak pockets are, some states where we are not represented, we are aggressively looking for properties in those states, because we want to be there in every single state in the country. Because today the dynamics have changed. People are looking at going to hotels. Wedding business is improving a lot in hotels. People don't want to it's a big headache to go to a marriage hall and conduct a wedding. When you go to a hotel, you end up maybe spending an equal amount of money only, but you have all the things with the press of a button, and on call everything is available. So I think we are today, if you really are a very diversified company. We have business hotels, we have leisure hotels, we are spread across most of the country. So,
So sir, how are the ARRs in these new regions that we are opening up, North and West, compared to North and East, compared to South that we were already had strong presence?
ARRs depend on the particular. You see, nowadays there is no hard and fast rule. You will have ARRs depending on demand and supply on a daily basis. So if there's a hotel which is a budget hotel in the north, it's going to do less than a budget than a mid-market or a superior hotel in the north. So it's not a question of north and south. I would say every city, and there's a capacity of every city to absorb a certain amount of rate. Like even government and companies have a entitlement limit to spending for their people who travel. If they travel to tier 2 cities, they have a certain entitlement. If they travel to tier 3 city, they have a certain entitlement. So we have to position ourselves depending on what the demand is and what the market can take.
Right. Okay, and just a last question from my end. So now that we've reached an EBITDA of 98 crores in FY23, where do you see it for FY24, sir?
See, FY24, as I said, we'll be crossing 120 crores.
Okay, that's it from my end. Thank you so much, sir. Thank you for this time.
Thank you. A reminder to all participants, you may press star and one to ask a question. Our next question is from the line of Rishit Shah from Nuvama Wealth. Please go ahead.
Yes, sir. Thanks for the opportunity. First question from my end would be regarding any new hotels that you open. For example, you all in new signings. So, what kind of time does it take for that hotel to mature in terms of occupancy, in terms of cost efficiency?
See, actually, what happens is when you open a hotel, it also depends on the timing of the opening. I'll give you, for example, we opened a hotel in Gurgaon in April. So, April to September is very hot and it's like business is low. Normally in hotels, 40% of business is done in that 6 months and 60% is done in the winter months. So, whereas the second hotel which we opened was in December in Kandol in Goa. So, in first month itself it did very good occupancy and so it depends on what time the hotel opens because, and that's not in our control entirely when we are managing a hotel. We can just push them to open at the right time. But then we can't delay the opening. If he is ready by the month of April, we can't tell him to open it in October, September, October. But so there's no hard and fast rule as far as this is concerned.
Okay. So I was kind of trying to understand as in if the average occupancy of our entire hotel booking is around 77%. So for the first year, maybe a new hotel would do somewhat, say, 60-65%, somewhere near that, and then mature enough to get to the average occupancy that is in the second year or the third year?
Yeah, correct. You're right. First year, obviously, it has to be less, maybe 50-55%. Then going to 60-65% and 70-75%. And certain markets, like tourist destinations also, occupancy may not reach 75-80%. Average occupancy will reach about 60%, which is also good for that particular location.
Correct. Got it. And the second question is on the capex end. So basically, we said most 80% of the hotels that we are going to open would be in management contracts, and 20% would be revenue sharing leases. So what kind of capex would be involved for the planned room addition for the next 2 years?
See, as far as the revenue share models are concerned, there a little bit of capex are required. So it works out to roughly, 5-6 crore of per hotel. Say a hotel is of say 70 or 80 rooms. In that 5 to 6 crore of capex we do in the first year. And in management, definitely there is no capex required. However, in the current financial year, we are looking at renovating few of our properties where the utilization of the internal accruals will use internal accruals to do the renovation of some of the properties. We have not done any capex in last 4-5 years. So this year probably 2-3 hotels of ours they need, but the amount is not very high. Maybe around 10-15 crores will be doing in the internal renovations.
Okay. So basically, if we say around 40 to 50 hotels this year, another maybe say 40 in the next year, so 80 out of that, maybe say 10 odd hotels, 10 to 15 hotels would be on revenue sharing. So that comes to around 70-75 crores.
Yeah, around 70 crores, yes.
Yes, so basically we would be generating a healthy amount of cash over this next 2 years, given the 120 crore EBITDA. So what are the plans for the cash deployment that we are going to generate?
We are looking forward to trying to get rid of any partners in our like we have done it in the case of Goa Hotel. We have made it 100% hotel. So similarly, other two subsidiaries also we are looking forward to buying out our partners so that we can develop the hotel as per our standard without any hindrance from the partners. We may, it's just in discussion stage.
Little bit also.
And maybe a little bit of that. Yeah.
Okay. Great, sir. Got it. Thank you. That's it from my intro. Thanks.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Rahul Bangadia from Lucky Investment Managers. Please go ahead.
So just as an addition to the previous question, will increasing dividend payouts also be a part of management of cash flows?
Come again, Rahul?
Sorry, will increasing the dividend payouts will also be a part of the management cash flows? The question that was asked before.
Yes, definitely.
So is there a policy that we are looking out for, sir? Like, this year we almost had a 50 crore profit. So while I can understand that, the payouts this year were lower, but sorry?
We have declared dividend this year for 20%.
That's as a percentage of the face value, right? But I'm saying, let's say out of 50 crores, this number will probably come to about 5 to 6 crores. That's about a 10-12% payout.
Yes. So we will be
looking at like
the internal cash accruals for different purposes, for the growth as well as retiring some debt. So, but next year definitely we'll try to give a higher dividend.
Sure, sir. Thank you very much. Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Amit Agarwal from Nuvama. Please go ahead, sir.
Hi, thanks for the opportunity. Sir, a couple of questions from my side. Firstly, I just noticed that your manpower to room ratio has increased from 1 to about 1.27. So can I take that as a constant or can it increase further?
No, it will not increase further. See, if you are seeing last year, it was a second wave of the COVID was there in the first 3 months. I think the number was very, very low. And but we'll try to maintain this. This is at the optimum level. See, current year we have been operating at 77% occupancy, and we have been able to manage at 1.27. So I think this will be the ideal number with which we will be operating all our hotels.
Sure. So, my second question is on ratio of F&B to room rental. I noticed in FY23, FY22 of course was impacted by COVID, is about 66%. So, is that an average going forward which you'll be looking for in this F&B to room rental? Am I correct on that?
Yes.
And thirdly, there's some amount of goodwill on your balance sheet. What does this goodwill refer to?
Yeah, goodwill is one of our assets in Jaipur, which we are depreciating over a period of time. Sure.
And finally, if you can give us some idea of, you said you're moving into the international scenario also. So any particular locations you've identified, whether it's going to be a management contract or any other revenue sharing or, what kind of a status is that? If you can give us some idea on that.
Well, right now, as I said, it's a very exploratory stage. We are exploring Sri Lanka, we are exploring Thailand, we are exploring Nepal, so the neighboring countries, And we just recently appointed a VP in charge of that, and is actively working on it. And I think we should very soon make an announcement.
That would primarily, would that be most likely be on the management contract?
You're right. Yeah. Okay. We're looking at management contract, but we are not averse to a revenue share or a lease in case some opportunity comes our way.
Sure. Thanks a lot. I'll come back in queue for further questions.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Rishit Shah from Nuvama Wealth. Please go ahead.
So thank you for the follow-up. One question on our kind of brand. So basically, what kind of exercise or investments or initiatives we are doing to kind of increase our brand recognition in the respective areas or places where we are? Thanks.
See, what we have done is we have earlier, of course, 2 years was COVID, and before that also the company was just expanding. And so now that we reached a critical mass, we appointed social media agencies across the country. We have got about 8 agencies who are working on Instagram, Facebook, and all sort of or direct mailers and things like that. We're working on that, and we are projecting our Regenta brand earlier, because the company is also known as Royal Orchid Hotel. So Royal Orchid was largely known, but people didn't know about Regenta. So now they're getting to know about Regenta, and the fact that we have established some of the hotels which are doing very well in the respective market. So brand is developing, and of course we are going to be hiring another agency who will look after the all India branding. And we'll be spending a lot of money on that, on branding, marketing, and I think we'll go stronger year by year.
Yeah, I wish the same too. Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. That was the end of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Well, thank you very much for attending this conference call, particularly later in the evening. Our board meeting got extended, so we were not able to send the details in advance. But I'm very happy that all of you have asked very, very relevant questions, and we will, whatever we have indicated about our growth in this session, we will try to meet up to your expectations in the coming months. Thank you.
Thank you
so much.
Thank you. On behalf of Royal Orchid Hotels Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.